out of 5 years. So if you're starting an enterprise, if you're starting your own business, and you're not going to be at it very strongly, you're not going to be very active in it, and you're not going to be making a profit in 3 or 5 years, then really the IRS is going to view that as a hobby. And that's going to create all kinds of issues. You're going to come to create business deductions and so on. So first goal, and really it's common sense, is we're in this to make money, right?
Right.
We're in this to make a successful business for you, for us, for all of us. So it's not a hobby, you're making a business. So what kind of business are you going to set up? You're going to set up a sole proprietorship, partnership, LLC, or a corporation. And really, it depends on what your personal goals are and how big your business is going to go. And each one of those different kinds of entities has different rules and regulations, both from a financial perspective and from a legal perspective. An LLC, for example, a corporation offers different protections than perhaps a sole proprietorship might. A partnership would be a different kind of enterprise. It really depends on the kind of personal situation you have, the kind of business you intend to have, whether you intend to do this on your own, or whether you will bring in partners to work with you and share in the success of your business. So obviously the mundane things that you need to do is talk to the IRS about an employer identification number. Whether you're a sole practitioner or not, I encourage you to have a separate EIN for the business. Open a business checking account. Choose your accounting method. It's very important when you sit down with an accountant to decide what's the best for you. Are you going to be doing strictly on a cash basis when you take cash in, when you spend money, or are you going to look at some other method? And I always recommend if you have one accounting software or another, QuickBooks, Quicken, Peachtree are 3 very good pieces of software that you can get. And that will allow you to do your record keeping on a computer in a very organized way so you can keep track and stay informed. Because that's really what we're all about in managing your business. It's making decisions, it's managing your technology, it's managing employees, and most of all, managing your time. You want to be out doing what you do best, which is generating new affiliates, generating business, talking to people. You don't want to be spending a lot of time on doing the bookkeeping, on doing the accounting. You want to be able to do what you do best. So it's important that you have good record keeping, that you understand what monies are coming in, what monies are going in. What are you doing with the checks that you get from me? Where are they going? Are they going to a checking account? Are they going into a savings account? Are you recording all of the checks that you're getting from ShopBest? And where are you spending your money? So that you can keep track of how profitable your business is. And most importantly, from the IRS's perspective, is to pay taxes when they're due. And if you have employees, that brings on a whole new set of rules. And if, even as a sole proprietorship, as an independent person, you want to make sure that you're making timely tax payments so that on April 15th, you don't get this very ugly notice from your accountant that you owe substantial amounts of money. And lastly, I can't emphasize it enough. Plan, plan, plan. Plan what your business is going to be about. That's one of the things that we're concentrating on most importantly in ShopBest, is that we're planning the growth of this business, that we're spending our time talking about what we want the business to be, for our benefit and for your benefit. We want to make sure that we do things correctly and appropriately so that we can grow this business in a reasonable way. And you need to do the same thing for your own business. You want your business to grow and be successful. And it just doesn't happen automatically or magically. It happens when you plan, when you talk about it, when you think about it, when you talk to your colleagues, when you talk to us at ShopBest. Those are all important people that you can talk to help you plan your business. In my experience, lots of companies, when they start out, form advisory councils, people who they respect and people who can help them as a sounding board for ideas. What do you think about if we do this? What do you think about if we do that? Helps you get another perspective on the ideas that you're trying to bring into the business. And so when managing your business, the things that we need to talk about now are several things. We need to talk about what you can and cannot deduct. Because really, in a business such as this, one of the advantages of it is to be able to take those expenses that you would incur and be able to offset the revenue that you get in your businesses. And I hope that you all are going to be getting lots and lots of revenue over the years to come. So I want to focus on three things, really. I want to focus on automobile expense, home office expense, and some other expenses, because those are the things that I see all the time. When I talk to people in my practice, when I talk to family members, those are the things that they're asking us. Automobile expense. The most important thing that you can do is keep a log of how you're spending time in the car. How many miles are you going? What's the purpose of your trip? Are you driving to the store for groceries, or are you driving to the next town over to attend a meeting? If you keep a log, that's documentation for the IRS as to what the percentage is of your business travels in your car. Because once you keep a log and understand whether you're using your car 50%, 40%, 70%, 80%, then you can take a look at what your expenses are in that car. What does it cost you to run the car in terms of oil changes, maintenance, all of the things that go in the upkeep of the car, including insurance, for example, on that car. And if you understand that you're spending 50 or 60% of the mileage in your car, time in your car, on businesses, then that becomes a deductible expense. And lastly, if you don't want to go to all that trouble of really keeping track of your expense, the IRS offers you an opportunity of just using the mileage reimbursement rate. So if you know you went 1,000 miles this month on businesses, on business activity, you can deduct 50 cents a mile. Excuse me. In 2009, when gas prices were skyrocketing, the IRS reimbursement rate was 55%. This year, in 2010, the IRS has dropped it to 50 cents per mile. Home office deduction. If there's anything that gets people in trouble with the IRS, it's the home office deduction. I can't tell you how many people that we counsel. My wife is a CPA, so you can imagine the kind of dinner conversations that we have all about debits and credit. But she was talking to me this morning about a client, similar kind of experience. Home office deduction, primarily based on regular and exclusive use of a part of your home. So, for example, if you have a third bedroom and you turn that into an office, that becomes a room that is now solely and exclusively dedicated to your business. It becomes your principal place of business. So you can certainly use your home address, but your home address really is your principal place of business. You're not establishing an office outside of the home, because then it becomes more difficult to substantiate a home office deduction. And really the last part of that is what's the percentage of the home that's involved in your business. So if you have a three-bedroom home, what's the square footage of your home, and how much of that square footage are you allocating to the business? If there's one thing that gets people in trouble with the IRS, and trouble may be too strong a word, if it's the one red flag that the IRS wants to take a look at when they're looking at returns, it's the home office deduction. They want to see that it can be substantiated and supported by your business, by your record keeping, so that the deductions that you take, which you wouldn't be able to take normally, which you wouldn't be able to take if you were working as an employee for someone else, and you're now taking to shelter your earnings, is appropriate.